Sunny would like to ask, the home loan interest rate has been remaining low. Do you foresee it will start to increase next year, so 2022?
I'm not sure when Sunny submitted the question, but obviously there's been, a lot of movement in rates around the world, and the Reserve Bank for Australia, which obviously sets the cash rate, the governor recently said he still didn't think rates were going to be increasing, the official cash rate, until late in 2023. Many economists, including the CBA economists, think that interest rates will be going up in terms of the official cash rate will be going up well before then. Our team believes it will be late next year. But you're seeing effectively interest rates and funding markets respond. I mean, the Australian bond market has got more than two cash rate increases in for next year. You've seen New Zealand, the cash rate's gone up, will continue to go up. Many international markets. So I think certainly the expectation of higher interest rates coming to Australia sooner than I think many people expect.
So 2022, not necessarily 2023.
That's what our economics team has got in for the November rate meeting. Modest increases, but as I said, the Reserve Bank is late 2023, so one will be right. Maybe it'll be somewhere in between, who knows.
Maureen and Jeffrey have asked about this in particular, and Maureen's question is, why are the term deposit rates so low? I know you've been asked that a number of times over the last few years. Why are the term deposit rates so low when your profits remain high? You cannot blame COVID-19 as your profits were still high even before the pandemic.
Yeah, look, I think that this question, and as you said, Helen, we've had a lot of questions like this, and I know that the Reserve Bank gets similar questions in terms of where the cash rate is, and when you've got an official cash rate of 0.1%, which of course is unheard of in the Australian context, that's put a lot of pressure, downward pressure on interest rates, and that's really hurt depositors who are either used to their term deposit being a source of income or their saving. And you're right, that's been one of the very strong themes for many years as interest rates have been coming down now for many years. But I think particularly over the last few, we've had more than 5 interest rate cuts over that period. And so, I mean, it's a little bit like gravity. With the interest rate coming down, you can't really offer an interest rate for a deposit much above where the cash rate is.
Yeah, Greg asks, why in these very trying times are credit card interest rates still so high? How about some relief? The banks, including yours, are charging too high rates. Give us all a break.
Yeah, and look, this credit cards and products like that is one of the areas that we've been really focused on. And we've brought out, of course, low-rate cards, and we've got instalment facilities linked to credit card debt, which is a much lower interest rate than just a standard awards card. And Angus and I have worked closely on a number of the products that we've brought to market, including Step Pay, which is a product that we launched recently, which is like a buy now, pay later linked to a debit card. So I think what we're trying to do is obviously balance out a number of different products that meet customers with different needs. Clearly, if you have anything more than a short-term finance requirement, then credit card, because it's priced differently because of the risks associated with credit card lending, it's not the right product for you. There's a range of other products that are more suitable. And there are obviously either in branch or certainly on the contact centre and or on our website, I think lots of information hopefully to help customers and for us to be able to support customers and meet their needs most appropriately.